welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Market 5. I'm your co-host, Joel Elconin, along with Dennis Dick and Brianna Valesky, and we have Tim Anderson on the line. He's the managing director at TJM Investments, 30 years of experience in the equity capital markets, and he is talking to us live from the floor of the New York Stock Exchange. It looks like you have a busy Friday today, Tim.
Well, we certainly have the potential for it. I think that clearly the jobs number came in light. I think that maybe the real surprise was the revisions to both July and August of a negative 60,000 jobs. I will say that there was a little bit of a hint of that last month because there was a downside revision last month, and usually. A lot of economists look at those downside revisions as an indication of which way the trend is going. Now, this has only been 1 month of it, but the reaction to the market so far is very interesting because where for many years people have been, cheering, the market's been addicted to and cheering on zero interest rates. You would think that this number would influence the Fed. If anything, it would be a reason for them not to hike.
Yep.
But the futures are getting smacked. Now, that's a very early reaction. They could be, the reaction could reverse within 20 minutes or so. Within, it could, who knows? But it kind of, I've certainly been in the camp that the market wants the first rate hike under the theory that it's really not even a tightening. It's just a first step toward getting rates off zero, but still having them be very, very, very low historically.
Do you think the Fed? Had this information when they made their interest rate decision, or had an inkling of what was going to happen?
They have a tremendous amount of private data from in-house in their own research. I seriously doubt that they had this information. That decision was close to 2 weeks ago. There's always been debate over if an impact number is coming out on a Wednesday, or if an impact number is coming out 2 days in advance of a Fed decision. Does the Fed have that information? And my understanding has been it almost depends on what number it is. So they may have had some. Clearly there's been headlines that there were some, layoffs in the works. From a number of companies for a number of different reasons. But I doubt that they knew what this number was going to be 2 weeks ago. Look, yesterday there were 3 or 4 of them. Most of them Fed voting members who were voted publicly state they voted against raising rates, saying they fully expect rates to increase before the end of the year. Well, there's 2 meetings left. There's October and there's December. So if they don't raise rates in October, are they still going to come out the following week and say, we intend to raise, we expect to raise rates before the end of the year? That would mean they're telling you they're going to raise in December.
Yeah, boy, oh boy. So what is a individual investor supposed to do here, Tim? You've had the pullbacks. Looked like we were gonna try and get back firmly into the 1900 handle. No such luck today. Gold is getting a pop off this. Holy mackerel, Tim! Are you seeing that?
Yeah, and to be very honest with you, I just don't know what these moves tell us in gold unless it were to, break 1,000 or go above 1,200.
Right. Okay.
I don't think gold represents at all what it used to years and years and years ago. It used to be the ultimate flight to safety before so many foreign currency markets had nearly unlimited liquidity. Look, the market's been kind of actually. There's been an impressive bent to it the last couple of days, in that it's recovered from these fairly steep midday sell-offs. We're less than a week from third quarter earnings. One of the fears had been that a lot of companies have been buying back a lot of stock, and that they're going to go into a quiet mode. For regulatory reasons, they're not going to buy stock, 2 weeks before their earnings report, or exactly what the time frame is. I'm not completely up on it, but they're not going to be in the market. Well, actually, the market's acted. The last hour indicator in the market's acted well the last 90 minutes of the day for at least 4 or 5 days in a row, and a couple of days yesterday. We could have just gone into a spiral on the way down.
What
and
about
we held
the
that
financials?
1900 level. We held the 1900. We held the day before, even after, and even on Wednesday, we broke briefly on the Nasdaq below the October 24 closing low. We got close to that level on the S&P, and boy, in the last 35 minutes of the day, they just turned them on a dime.
What does this mean for the financials, Tim? I mean, a lot of people were piling into financials. A hike in interest rates, good to financials. Now the rug is pulled out from that, and now Goldman Sachs here trading down 3.5 sticks here. Let's just take the chart, do a little bit of technicals here. Obviously, not liking the news.
You're going to have a flat yield curve if rates aren't going to go up, and you're going to have a flat yield curve. That's never really been a good scenario for the financials. The financials, to the extent that they're still allowed to have a bond book, they make they do really well with a steeper yield curve, and that usually that helps their net interest margin a lot. Obviously, I mean, the other issue with the financials are right now very highly regulated, low-yielding stocks, almost like public utilities. They've been regulated they've had pressure on them to sell all their real high-margin businesses. We've talked about that before. And they look on a valuation basis, on a price to book, they look really, really cheap. For a lot of those reasons, I think. I mean, if you're a yield investor and you're looking to buy yield, I think your better path is to take a really hard look at some of the utility stocks, or some of the REITs.
TLT's getting a nice pop here. The tracker of the bond here, TLT, big spike in pre-market trading over 125 here. Taking a look at the dailies here. Did have some resistance here at 125, so this stock is...
Yeah, the big question is, I'll try to look it up real quick, at what level will represent 2% on the 10-year.
Okay. Tim, let's move on here. Boy, the oil patch, what a reversal you had in yesterday. What do you make of this consolidation here? I mean, have you ever seen, after this huge move that we've had and this big down, now you are getting into a daily, look at this thing. Man, over the whole month, between 43.5, I mean, earlier in the month you did get close to 50, but have you ever seen crude just consolidate like this? And what do you look
Well, it's traded in a pretty tight range. The positive side is it's had two real hard assaults on the $40 level. One in March and one maybe 6 weeks ago. Might have traded below 40 briefly on the WTI. Held. It's in the mid 40 range. You get bearish data points come out. It gets hit for a little while, and it rebounds. It has trouble getting through. WTI has trouble getting through 45, 46. Brent has trouble really testing 50. But you've had short-term bearish, maybe long-term bullish stuff come out data points come out in terms of the rig count and in terms of inventories and production. And there seems to be, it catches a bit on weakness. Between here and $40, oil catches a bit on weakness. You get one or two things happen, get it above 50, maybe you get a run at 55.
What about biotechs?
Pumping up the market.
What about biotechs here? Boy, just been beaten up. Just looking at the IBB here, Gilead gets downgraded today. Any biotechs that are catching your fancy here?
You've got to you've got to look at the high quality names in the sector because so many of them just trade at really high valuations. Clearly, a lot of the pharmaceutical companies that don't have a lot of product in the pipeline have been, potential buyers in that space, and there have been some transactions. But the valuations are, without a real vibrant M&A action, the valuations have been just out of control, unrealistic. And certainly for people to take profits in some of these names that have had multiple fold increases the last 3 to 4 years, nobody's going to argue with that. The other day, I think at the end of the quarter, they were down 12%. I think they were down 12% on the quarter. That, it kind of had a big impact on NASDAQ not outperforming like it had the first half of the year. If you're going to play in that space, you got to really know what you're doing and go after the higher quality names because there's some that can probably still correct from whatever levels they're at.
We're right back at Thursday's low here, 18.90 and a quarter. That was Thursday's low. We just hit 18.91. You're looking for support here, folks. 18.90 and a quarter. We've had almost a 40-point. No, excuse me. Almost a 40-point range so far in the index. The 9-day average range is 40 and a quarter. We didn't get there to that 90 and a quarter. Getting a pop here, 18.91. That's your pre-market low. Tim, moving on here. Did you see the very bullish note on Apple today? I think from Drexel Hamilton, initiated with a $200 price target. A lot of weakness in that stock during the week. Way off, on a relative basis, way off the flash crash lows. What's your take on Apple?
I didn't see the note. I think that clearly, if on traditional metrics, this is not a stock that is really overpriced on a PE basis. It's 9-ish, between 9 and 10. They clearly have a buyback in place. They've got Icon sitting there on the sidelines, and it's really hard to bet against his track record the last 20 years. Who knows what the real price target would be, or what their next real. I think the thing maybe that's held the stock back a little bit is that people are used to these really, game-changing, revolutionary product rollouts that they've had so many times in the last 5 or 6 years. And clearly the last couple big splashes they've had have really been upgrades and enhancements.
What are you seeing? What are you seeing from order flow? What are you seeing from your clients here over the last couple of days? Goldman Sachs came out. I think it was either yesterday or
the oil stocks are really interesting here. Aside from the fact that consumer discretionary has probably been has been well bid for the last week or so, with and without the volatility. There was a tremendous portfolio flush out in the really beaten up oil names, And the last few days, there's definitely been value buyers in the high yielding global refiners that are going to survive any shakeout that might happen. You just have to still be concerned about the tertiary names and the drillers that have a higher cost of production. The other sector that you have to make some type of a mention of is the MLPs. It's a complicated group. They pay out free cash flows. Some of them are really beaten up. Even the names like PAP and EPD that people feel are the real high quality names in the sector have been really beaten up. I think retail gets levered in that sector from time to time, high wealth retail, because of the dividend payouts. And some of the dividend payouts they're not even really dividend payouts.
Hey, Tim,
they're paying out a percentage of free cash flow.
Before I let you go, any talk about hurricane preparation there? I guess it's supposed to move into the New York City area on Tuesday. Any talk, any preparation?
It's still days away, but I mean, the latest little tweak to the forecast is it's a little bit more likely that it's not gonna come, that the center of it's not gonna come onshore. Look, that could change multiple times in the next 3 days.
That's what I predicted last night.
Nobody's taking it lightly, that's for sure.
Yeah, that's what I predicted last night. Talking with Lisa about it. Tim Anderson, Managing Director, TJM Investments, joining us here from the floor of the New York Stock Exchange. Thanks a lot, Tim. Be safe. Have a good weekend. We'll talk to you again soon.
Have a great weekend, guys.